For years, the American crypto industry has kind of felt like the Wild West, a multi-trillion-dollar landscape with basically no sheriff and no clear set of laws. But now, a landmark piece of legislation has just ridden into town, and it's promising to bring some order to all that chaos. Okay, let's get into it. We're looking at the Clarity Act. It's a bill that's supposed to finally draw a map for crypto in the US. But the big question we're asking is, does this map actually lead to a clear destination, or does it just send us deeper into contested territory? And that, right there, is the heart of the whole issue. This one single question has been the source of lawsuits, of just massive confusion, and frankly, it's put a real chill on innovation. I mean, think about it. Without a clear answer, how can anyone build, or invest, or operate with any kind of confidence? So, to really get why this new act is such a massive deal, we first have to understand the mess it's trying to clean up. Welcome to what everyone calls crypto's regulatory gray zone, a place defined by a really high-stakes power struggle. What you're looking at here, this slide, it really boils down a years-long conflict. On one side, you've got the SEC arguing that most digital assets are securities, like stocks, and they think crypto should fall under their super strict investor protection rules. But on the other side, you've got the CFTC. They see things like Bitcoin as commodities, more like gold or oil, and they want to be the ones in charge. So with both of these massive agencies claiming jurisdiction, the industry has been stuck right in the middle of a regulatory tug-of-war. And the results of that turf war? Well, it hasn't been helpful guidance or clear rules, that's for sure. Instead, we've seen what a lot of people call an enforcement-first approach. This basically means regulators haven't been writing rulebooks. They've been filing lawsuits against some of the biggest players. For crypto projects, it's been like trying to drive on a highway where the speed limit is a total secret, and you only find out what it is when you get pulled over. This quote from Mike Katz, he's a partner at a big law firm, it just captures the mood perfectly. The industry has what he calls PTSD from this whole era of uncertainty. So the key point is this. They don't just want guidance, they want laws. They want Congress to write down the specific rules in black and white so they're not at the mercy of a regulator's changing interpretations anymore. And that demand, that cry for some real legal certainty, is exactly what led to this. So let's get into it. Enter the Clarity Act, which is Washington's most ambitious attempt yet to create a real, actual rulebook for crypto. Okay, so its full name is a bit of a mouthful. The Digital Asset Market Structure Clarity Act. It was passed by the House of Representatives back in July 2025, and its entire purpose, its whole reason for being, is to end that turf war and finally establish a clear, predictable framework for how digital assets are treated under U.S. law. So how does it actually do that? Well, this slide shows the core idea brilliantly. The Act basically creates a life cycle for a digital asset. See, when a project is just starting out and raising money from investors, its token is treated like a security, and it's under the watchful eye of the SEC. But, and this is the key, this is the real innovation, as the project's blockchain becomes truly decentralized and matures, with no single group in control, the token can transition. It essentially grows up into a digital commodity, and then regulatory oversight shifts over to the CFTC. And it's not just about that one big idea. The Act gets into the nitty-gritty. For instance, it creates clear legal definitions for things like blockchain and digital commodity. It formally splits the job between the SEC and the CFTC. It sets a new fundraising cap at $75 million, as long as there are disclosures, and, this is a huge one for the crypto community, it protects an individual's right to self-custody their own assets. All of this is aimed at one single thing, creating predictability. Okay, so let's put on our optimists' hats for a minute. If this act actually becomes law, what does that future look like? Well, the promise is one of certainty, and the hope is that it unlocks a whole new wave of innovation and investment right here in the United States. And make no mistake, the big players are already here, and they're waiting. I mean, by the second quarter of 2025, spot Bitcoin ETFs, those are the investment products for mainstream institutions, they were already managing over $80 billion. That is a massive amount of capital just sitting there, primed to grow even more once the rules of the road are finally crystal clear. This quote from Brian Armstrong, the CEO of Coinbase, it just connects the dots perfectly. For companies like his, regulatory clarity isn't just about trying to avoid lawsuits. It's the green light they need to start building the next generation of financial products. We're talking things like crypto-backed credit cards or high-yield stablecoin programs that could really challenge the traditional banks. So when you get right down to it, the argument is that pretty much everyone in the ecosystem stands to benefit. crypto companies can finally focus on building cool stuff instead of fighting legal battles. Big institutional investors get the stable compliance rules they desperately need to invest with confidence. Everyday retail users, well, they get stronger protections and clearer disclosures. And for the country as a whole, it's a chance to position the U.S. as a leader, not a laggard, in this new financial tech.
Okay, but that's only one side of the story, right? The Clarity Act, despite its name, is far from universally praised. So let's flip the coin and look at the other side. The criticisms, the complications, and the argument that this bill might actually make things worse.
So the first major pushback comes from consumer advocates. Groups like Americans for Financial Reform. They argue that by shifting power away from the SEC, which is, let's face it, the nation's toughest market cop, the bill seriously weakens protections for everyday investors. Their big fear is that if you classify more tokens as commodities, you'll open the floodgates to a bunch of high-risk products that don't have the strict disclosures that securities laws demand. And now for a fascinating twist. A former head of the CFTC, the very agency that gets more power under this bill, has warned it could totally backfire. Timothy Masad argues that creating this really complex, two-headed system might not simplify things at all. In fact, he thinks it could deepen confusion about who's supposed to enforce what, especially when the tech is evolving at lightning speed. Then there's the big tech angle. Critics like Senator Elizabeth Warren, they see a massive loophole here. They warn that the act could allow giant corporations, think Meta or Tesla, to issue their own crypto tokens, call them commodities, and raise huge sums of money from the public while completely sidestepping the SEC's rigorous oversight. And this really gets to the core of the debate over just how clear this act really is. Legal experts point out that the bill leaves a lot of crucial questions unanswered. It just punts them down the road for the agencies to figure out later. As Eli Cohen puts it, the devil is in the details. And what that really means is the full impact won't be known for years. It'll likely be decided by a whole new round of regulatory interpretations and, you guessed it, more court cases. So, where does all this leave us? Has Congress actually delivered the clarity the industry has been begging for? Or have they just opened up a whole new can of worms? Well, this whole debate is already having a very real-world impact. Take a look at this. This is a recent post from Coinbase's top lawyer. Now, the Clarity Act that passed the House specifically says that crypto staking services, that's where users help secure a network for rewards, are not securities. But even after that passed, he's calling out 5 different states that are still pursuing legal action against Coinbase over that exact issue. This shows you plain as day that even with a new federal law, the regulatory battles are far from over, especially at the state level. And that's really the bottom line. The Clarity Act's passage in the House was, without a doubt, a monumental step. For the first time, it put definitions into law and created paths to compliance. But its journey is not done. It's now heading to the Senate, where all of these same criticisms and concerns are going to be debated all over again. Its final form is anything but guaranteed. Which brings us right back to where we started. Is this finally the end of the Wild West for crypto? Is this the clear map that's going to guide responsible innovation for years to come? Or has it just redrawn the battle lines, creating a new, maybe even more complex conflict between federal agencies, the states, and the industry itself? For now, that remains the multi-trillion-dollar question.